Howdy, boys and girls. I'm back. It's the Liberty Call for Wednesday, March 9th, 2022. I hope everyone's having a blessed day out there. It is pretty gross out here in Colorado in the mountains. So yesterday was a sunny day. It was beautiful. I mean, granted, it didn't get above freezing, but it was a beautiful day. The sun was out, melted some of the snow off the driveway, which was nice. But, today, not so much. It is overcast. It's a typical, Texas winter day where the sun is not seen, and it has been snowing off and on most of the day. I mean, nothing serious. It's not like the roads were clear. I had to drive up to Denver to get my Remicade infusion in my arm, but so the roads were fine. So that was fine. I could drive my typical reckless way. I drive like a maniac on these county roads out here in the middle of nowhere. So, but and even on the way back, still clear, but it is probably going to be a little gross for the folks who are going to be commuting home at, 4 or 5 o'clock this afternoon. I imagine there'll be some more pileups, but hey, that's the weather here is pretty awesome most of the year, other than the days that it snows. So, but outside of that, life is pretty good. So, all right. Well, I've been rambling for a minute and a half about the weather. So I imagine if you're tuning in, you're probably not tuning in to hear about the weather forecast in Larkspur, Colorado. So, all right. Well, let's go ahead and jump into the markets. It was a much better day for the indexes. Looking at the futures overnight, they were kind of, flat. But then this morning woke up to the futures were out of control. So, all right, the Dow Jones was up 2%, closing at 33,286. The S&P 500 was up 2.57%, closing at 4277. NASDAQ was up 3.59%, closing at 13,255. Small caps were also up 2.3%. The VIX was down 7.63% today, closing at 3245. Let's see. We got our other American exchanges. They were up. Getting into Western Europe. The DAX was up 7.9. The FTSE was up 3.25. The CAC out of France was up 7.13. The Euro Stoxx was up 7.44. So most of Eastern and Western Europe had a really good day for their markets. Russian markets still closed. Getting into the Asian markets. What is this? Poland, Hungary, Turkey, all up. Let's see, we got two down ones. Saudi Arabia and Japan were down less than 1%. And then the Asian markets. Let's see, Shanghai, the ZSE component, the China A50, the DJ Shanghai, and the Hang Seng all down. Not too terrible. They were down, from 0.67, and the worst was down 1.13. So, and then these other small Asian markets were up also. So, everything being said, from an index perspective, obviously, things look much better. A nice little bounce back. However, I still am on the bear train. I do think we have a much greater probability of going into a bear market than continuing this bull market that we've been on for such a long time. So time will tell. I think that with the interest rate increase next week, which if they don't do that, then I think it'll just throw everything into chaos. But we'll see. I think we're definitely good for 0.25%. I personally would like to see 0.5%. So, all right. So the things that got beat up in the last day have been commodities. Gold was down 2%. Silver down 3%. Let's see here. Copper, platinum, palladium, they're all down. Crude oil down 10%, 10 and 11%. Let's see here. Most things were down. Natural gas was flat. Nickel. I saw a thing about this yesterday. Nickel was up 68% yesterday. It's trading at, I think this was per ton. So 50,271 per ton. That's, that's pretty huge. Um, but the only other commodities that were up were soybean meal and cocoa. Everything else was red for the last day. So not a good day for commodities. Again, I think, the, institutional traders see that, hey, we got another up day. Let's go ahead and keep pumping those numbers. But I think they'll probably be the first ones to pull the ejection handle when it's time to get the hell out. So, all righty. I got three articles, pretty quick. I'm going to try to make this a quick one today. I didn't have enough time to read through enough stuff today since sitting in a chair for 2 hours getting poison pumped into me. So this is a market recap. S&P 500 jumps on revived hopes for diplomatic path to end war. Inflation data eyed. It's written by Yassine Ibrahim from investing.com. Let's go ahead and start out. The S&P 500 surged Wednesday on hopes of a diplomatic resolution to the Russia-Ukraine war after Ukraine said it was open to discussing Russia's demand for neutrality, which could prove key in ending the conflict. U.S. equity markets are rallying this morning as favorable geopolitical chatter and bargain buying work to reduce oversold chart conditions on benchmarks like the S&P 500. Janie Montgomery Scott said in a note. Ukraine reportedly said it was open to discussing Russia's demand of neutrality in exchange for security guarantees. The prospect, albeit still very nascent, of a diplomatic resolution to the Russia-Ukraine crisis cooled the run-up in commodity prices, including energy, and eased fears about prolonged impacts on global growth. Technology stocks and financial stocks led the market rebound, with the latter boosted by a surge in banks as Treasury yields jumped. God, I can't read. Being out in the cold makes my nose run. All righty. Let's jump down here. The rebound in broader markets comes a day ahead of an inflation report expected to show that consumer prices rose nearly 8% in the 12 months through February. The economy, however, is expected to remain in good shape despite forecasts of slowing growth ahead, as the consumer, which makes up about 66% of the economy, has shown little sign of reining in spending. The lack of early signs of deterioration in consumer spending, like substitutions and trading down, reflects the ability of the consumer to continue to spend money. Sarah Henry, portfolio manager at Logan Capital Management, said in an interview with investing.com on Wednesday. They're still waiting to pay up for all the things that they were paying for throughout the pandemic. So now, as far as the whole Russia-Ukraine thing, Russia's going to win this. They are the 800-pound gorilla in the room on that side of the world. And, personally, from my point of view, there are no good guys. Putin's not a good guy. Our president's definitely not a good guy. Doesn't matter who the president of the United States is; they're all assholes. They continue to bomb countries around the world, and have military actions without a declaration of war. And I have a real problem with that. It's not like I'm saying, oh, Putin's a good guy. The NATO countries kept poking the bear and poking the bear and poking the bear. They installed Zelensky back in 2014. They tossed out the previous president because they really didn't like him. I guess he wasn't Western enough for their tastes, and put in a puppet government. So I guess the puppet governments are good as long as the U.S. is in control of them. If it's another foreign nation that we don't necessarily like very much, then we get our panties all in a wad. So anyways, there's, again, no good guys. Everyone on both sides is a bunch of idiots. And, continuing to put military assets of NATO and the U.S. closer and closer to the Russian border, I'd be pissed too. If Russia and Mexico became buddies and they were lining up ICBMs along the Rio Grande, I don't think we would be very happy about it. So, and I know I've talked in previous videos about the Cuban Missile Crisis back in the early 60s. We got all wound up because we saw missiles in Cuba. Well, the reason they were there is because we had missiles in Turkey pointed at Russia. So once we pulled our missiles back, they took theirs back, and then we had relative peace. Personally, I think the Cold War was nothing but a fabrication of our government just to have a bad guy to give us a reason to spend money through the military contractors. All right. U.S. labor market, very tight. Job openings near record high in January. This is written by Lucia Mutakani from Reuters. U.S. job openings fell in January, but remained near record highs as worker shortages persisted, pointing to a tight labor market that will continue to generate strong wage gains and contribute to keeping inflation high. Job openings, a measure of labor demand, dropped 185,000 to 11,263,000 on the last day of January. The Labor Department said on Wednesday its monthly job openings and labor turnover survey, or JOLTS report. Data for December was revised higher to show a record 11.448 million job openings instead of the previously reported 10.925 million. So was that about 500,000 additional jobs were still open? The government revised the 2021 data. The labor market is tight as a drum, and this means wage pressures and inflation will persist, said Christopher Repke, chief economist at Forward Bonds in New York. Time will tell if in Europe and plummeting stock prices will slow down the demand for new hires in the months to come. The labor market still has the chance to gracefully slow down with demand cooling, but not necessarily crashing, said Nick Bunker, economic research director at North America at Indeed Hiring Lab. But so far, the data on openings and turnover don't show that trend beginning. In January, vacancies fell in several industries, with accommodation and food services reporting a 288,000 person drop. In the transportation, warehousing, and utility industry, job openings fell 132,000, while unfilled positions in federal government decreased 60,000, but job openings increased 136,000 in other service businesses. The durable goods manufacturing industry reported 85,000 more job openings. The job openings rate dipped to 7% from 7.1 in December. Hiring rose by a modest 7,000 to 6.5 million. Hiring was little changed in all industries. The hires rate was unchanged at 4.3%. The government reported last week that non-farm payrolls increased by 678,000 in February. There was a 4.8 million gap between the number of job openings and the number of unemployed workers in January, accounting for 2.9% of the labor force. Economists viewed the jobs workers gap as a better indicator of labor market tightness and wage growth. There were a record 1.8 million open jobs per unemployed person, there were 1.8 open job, not million. There were 1.8 open jobs per unemployed person in January. So basically 2 open jobs per human being who's looking for work. Also underscored labor market conditions. The U.S. Chamber of Commerce urged lawmakers to boost legal immigration. It's past time for Congress to act to modernize our broken immigration system. U.S. Chamber of Commerce Chief Policy Officer Neil Bradley said in a statement, "We can't get inflation under control, unclog our supply chains, or fully grow our economy and remain competitive unless we welcome more people into our country to fill these jobs." Let me stop there. There's plenty of people to fill these jobs. Americans are just lazy, unskilled morons who, for some reason, want to get paid $100,000 a year to work at McDonald's. So the best thing that could happen is to turn off welfare, turn off unemployment, and let these people starve to death. And that'll get them motivated to go and get a job or get the skills to get the job that they feel that they deserve. All right, let me jump back in. The JOLTS report also showed the number of people voluntarily quitting jobs decreased by 151,000, still to a still high 4.3 million in January. Fewer people quit in retail, trade, and information sectors, but more left their jobs in finance and insurance. The quit rate fell to 2.8% from 3% in December. The revisions also showed 47.8 million quit their jobs in 2021. Before the pandemic, quits counted for 50% of all job separations on average, said Julia Pollack, chief economist at ZipRecruiter. In 2021, however, they made up 70%, a sign workers had more job security than usual and were largely the ones calling the shots. The JOLTS report supported economists' view that a slowdown in wage growth in February was a fluke. Average hourly earning were unchanged last month, which lowered the annual increase in wages to 5.1% from a 5.5% in January. This data tells us far more about the labor market than does a flat reading on average overall earnings in February, says Conrad de Quadros, senior economist advisor at Breen Capital in New York. So again, it's kind of good and bad. The unemployment rates look pretty good. There's lots of jobs available. That again, a good thing. But there's far too many unskilled people out there. And don't say, "Oh my God, the government needs to pay to train these people." No, 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 no. People need to get up off their lazy butts, pull up their boots, and get to work. And if the opportunities dry up in your current field, maybe that field is not the right field to be in. And I'm completely open. If for some reason investing advice becomes automated and you can just turn on a computer and have it do everything for you, I'll go do something else. This is my third career in my life. So I was a sailor in the Navy, and then I was a recovery and debt collector, for nearly a decade before I started doing this 16 years ago. So I'm very nimble. I'll be happy to, I love what I do, but if something better comes along, I am certainly not opposed to diversifying my income streams. So, all righty. Last article has to do with Bitcoin. So for any of you crypto bugs out there, this might be of interest to you. Kevin has written, it's titled "Bitcoin Surges After Biden Signs Executive Order on Digital Assets," written by Kevin Buckland, Meta Singh, and Gertrude Chavez Dreyfus. All right. This comes from Reuters. Bitcoin soared on Wednesday after President Joe Biden signed an executive order that requires U.S. government agencies to assess the benefits and risks of creating a central bank digital dollar and other cryptocurrency issues. The executive order potentially expands the adoption of virtual currencies in the U.S. financial system. Biden's order will require the Treasury Department, the Commerce Department, and other key agencies to prepare reports on the future of money and the role of cryptocurrencies will play. With the recent sanctions regime in place as a result of the war on Ukraine, it is doubly imperative that we have a regulatory framework in place for digital assets that counters illicit finance and prevents risks to financial stability and national security, said Michael Pearson, managing partner at law firm Fisher Broyles. White House last year said it was considering wide-ranging oversight of the cryptocurrency market, including an executive order to deal with the growing threat of ransomware and other cybercrime. In midday trading, Bitcoin rose 9.1% to 42,280, on track for its largest percentage gain since February 28th, while small peer Ether, the coin linked to the Ethereum blockchain network, added 6.3% to $2,740, also set for its best day this month. At 21 shares, we've always believed the best way to introduce or expose investors to crypto is through a safe and regulated approach, said Hani Rashwan, Chief Executive Officer and co-founder of 21 Shares, the world's largest provider of crypto exchange-traded products. Today's action will help the U.S. establish itself as a leader in crypto for years to come. I doubt that. U.S. exchange-traded funds tracking Bitcoin futures that gained regulatory approval last year also jumped. ProShares Bitcoin Strategy ETF and Valkyrie Bitcoin Strategy ETF surged 9.8% and 10.2% respectively in early trading. U.S. crypto miners that act as proxy for moves in digital coins also advanced. Riot Blockchain soared 11.9% and Marathon Digital Holdings surged 14.6%, while crypto exchange Coinbase Global Inc. added 9.4%. So, if you're a crypto guy, I don't know if this is good or bad, getting our government involved in it. I personally don't think or believe that the government should have any say or control in the crypto markets unless there is some fraud or defrauding going on. At that point, when someone has been harmed, that's when the government should come in and play referee. But until that situation occurs, I do not believe that it should just be a completely free market. Let people trade currencies for goods, and that should be the way it is. Anyways, all right, kept it under 20 minutes, so I'm proud of myself there. Hope if anyone needs anything from me, don't hesitate to drop me an email or drop me a phone call. Otherwise, I will be back tomorrow afternoon with Thursday's Liberty Call, and I'll have the snow report. We should get somewhere between 4 and 8 inches, which Hey, at least I got that going for me. Another date with the snowblower tomorrow afternoon. But anyways, again, hope everyone has a great night, and I'll talk to you guys tomorrow.